Okay, welcome back to all things mortgage related. And today, let's talk about credit. When going through the process of buying a loan, credit obviously is a very important thing, but it can be a little bit counterintuitive to borrowers as far as what they need. Now, depending on the program, it will determine what the minimum credit score requirements are. Now, there's a huge range on these things, and I don't want to get too much into the details here, but on government programs like FHA, you could go down like a 580 credit score, which is not a strong credit score, but you can still qualify and own a home with those types of credit scores. So the first thing we want to say is uh, don't disqualify yourself. Have your lender look at to determine whether or not your credit is acceptable or not. I've too often seen people tell themselves that, oh, my credit's not good enough, and it actually is, and they could qualify. Flip side, I've had people think their credit's just fine, and it's not. So let's dive into credit. Now, first thing I want to talk about is there's lots of different scoring models out there, and so people nowadays have got their phone apps. They're looking at their Credit Karma, or maybe their credit card company provides a score, their bank provides a score. And then they kind of get sometimes like a little flustered sometimes when they look at their phone and it says, oh, my credit score is 720. And then your lender pulls it and says, that's 710. So you see differences there. So there's lots of different scoring models. And Credit Karma can invent their own way of deciding what's considered good or bad, the highest level, the lowest level, what impacts these things. From a lender perspective, we use a FICO score. But even within FICO, because again, all these apps give you your FICO, there's like last I heard, and this was some time ago, was over 52 different algorithms or formulas on how you create a score from that. And lenders are required to use only like I think 10 of those 50 some scores. Only 10 of them are actually ones we even have the option of using. So don't be surprised if you will see a difference between this. Now, with that said, when the lender looks at credit, it's not just about the score. Um, it's about what's causing the score. So just because you have a score, say, let's say 660, and for most programs, 660 is going to work for a qualifying score. However, if you have too many late payments within a certain 12-month period, and typically that's the magic, what's going on in the last 12 months, that even though the score meets the requirement from a score standpoint, the credit history may not. And so that's a really important thing to note as well. On the flip side, just because you have a high score doesn't mean it can work either. And I'll give an example. It goes back years. I had a client that had, I think it was like a 700, 710 score, which is a great score. They were going with USDA, but USDA is very specific on not having more than 2 late payments within the last 12 months. Well, they had a late payment on a student loan 11 months and 10 months ago. And so even though they had a perfect credit score and everything else in the file was great, they actually had to wait for one of those late payments to age out before they could use that particular program. Now, the other thing has to do with credit depth and history. And so this is for those borrowers who maybe you have a decent credit score, but when we look at the report, there's only one item on it. And maybe that one item has only been open for 8 months. So depending on the program, typically you're going to have on the more lenient side, at least one trade line open for at least 12 months with good payment history before the score that you have is considered valid. For the other programs are a little bit more restrictive, and this gives you the widest range. It's looking for 2 trade lines. So like a credit card, 2 credit cards, or car loan and a credit card, but 2 trade lines that have been open for at least a year, so 12-month history, and showing that activity there before they consider the score a valid score. If you have less than that, then they're like, great, you have a score, but we don't really trust it. There's just not enough history there for you. So that's the most common. Now, it is possible to have no credit score. And that doesn't mean that you don't qualify for a home loan. If a lender pulls your credit report and it comes up and there's no scores reported and there's no late or derogatory items, because sometimes you'll have no score because maybe you had credit in the past, but it aged out. Well, you might still see that, 5 years ago or 7 years ago, there was some late payments on an account. You have no score now because you haven't been using credit for 2 years. In that case, you would have some issues there. But if you pull it, there's no score, there's nothing listed on the credit report that's negative, then a lot of the programs will allow the lender to do what's called alternative credit. And this is where we can then try to create a score from you if we can verify a 12-month payment history from like your landlord, maybe your home car insurance or renter's insurance, utility bills. These are different examples. Phone bills is another one that a lender, as long as you've been paying it to the same provider for at least 12 months, and again, there's no score and it's a clean report, and then we can use that. So that's kind of what a lender is looking at for credit report, is looking at what's the score. That's going to definitely determine, do you meet the minimum requirement? How's that impact rate and mortgage insurance? What's making up that score? So does it pass mustard? So just because you have the score doesn't mean you pass mustard. And then, is it necessary for the lender to maybe do some additional alternative documentation to help support the file? If you have any questions on this, let me know. If you have specific questions, put the comments down below or reach out to me. If you're finding these helpful, hit subscribe, hit the bell, share with a friend. Till next time.